Hey everybody, welcome to this week's video. We'll be going over the datasets, the earnings, and the SPY technical analysis for the week of August 10th, 2026. Now, as you can see, I did remove the streaming schedule. I am going to be changing that up just a little bit as it has been very difficult for me to stream as much as I've been wanting to. So once I get that figured out, I'll get the correct schedule on there and we'll be good to go. With that said, let's go ahead and jump straight into the data. Now we do have some interesting data sets this week. For Monday, we don't have any data. For Tuesday, nothing very significant. We just have some existing home sales data. We have the weekly ADP data, so nothing I'm too concerned about there. Now for Wednesday, this is when we do have the big data. So at 8:30 a.m., we have all the CPI data, so the consumer price index. Um, Last print was very low. I mean, that's an understatement. So the forecast is showing sort of a smaller print this time, a lower print this time, except for the CPI month over month, just because we had such a negative print last time. I think that the forecasters can't exactly come in and say, oh yeah, we're going to have an additional negative 0.4, 0.5%. We can see that. I'm not going to say we're not going to, but that's just something that we have to be concerned with overall, is that the forecasters are showing cooler data except for those month over month readings, okay? Now for Thursday, we have the PPI data. So that will be following fairly close to what the CPI data gives us. Again, the PPI last time was very cool. We had a negative print. Again, the CPI or the PPI follows very closely to what the CPI does. So whatever the CPI gives us, the PPI will be following very closely in its footsteps. The forecasters are showing overall fairly neutral print. They are showing a higher month over month for July. We'll have to see what the data gives us because I don't really think that the forecasters are correct this time. They could be, and I could be incorrect. We'll just have to see. Now for Friday, at 8:30, we have the retail sales. That covers the core retail sales, and retail control. All very important data, followed by the Michigan consumer data and inflation data. That comes out at 10 a.m. So 30 minutes after the open. That's kind of the main one we have to really concern ourselves with. Even though the core retail or the retail sales data can move the market quite a bit, it's really going to be the Michigan data that really sways the market overall on that Friday. But not a big week, even though it is a very big week. We have the CPI and PPI, but other than that, all this other data isn't too concerning. Now, the earnings this week aren't too significant. We do have a couple important ones. One especially that could really move the market quite a bit. But for Monday, I am highlighting that I am watching for HIMS because I do have a very large position going with that. I have many September calls going, so I am interested in that. But in terms of the overall market sentiment and everything, what happens with any of these earnings aren't really going to influence the SPY overall. Now for Tuesday, we have SMCI and CoreWeave, so Supermicro and CoreWeave. Now these can influence the market a little bit, more so CoreWeave than SMCI at this point. SMCI used to be a powerhouse, but it's kind of, pulled down a little bit. CoreWeave kind of the same, but it does have quite a bit of influence still. Now on Wednesday, we do have Cisco, and I know not many pay attention to that, but that's still a massive company. That's still a very important tech company overall. So I always try to focus on paying attention to it because we have had some of the earnings from Cisco where it has moved the market quite a bit. So that's always something to definitely pay attention to. Now, the really big one this week is Applied Materials, AMAT. That's on Thursday after the close. This is a super huge semiconductor company, basically like another TSM, AMD, very big company, right? So always pay attention to what's going on with AMAT. We've had AMAT pull the market down. We've had AMAT, you know, rally the market. So whatever goes on with AMAT on Thursday afternoon should definitely be influencing the price action on SPY for Friday. But not a big week overall. Basically, the biggest one is Applied Materials. Um, and then I'm looking at some of these other ones, basically HIMS and those other ones that I mentioned, but nothing overly large compared to, just the Applied Materials. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now, jumping into the technicals here, and we're going to start with the daily time frame as always. We're going to be looking at the moving averages and Bollingers. Now, we are very close again to this upper Bollinger, but we have not had a 5-month test so far. You can kind of see this on the hourly if I hide the moving averages. It looks like this might have been that 5-day moving average test, but that was not the case. So the 5-day moving average has not been tested. Okay. Now, the reason why I'm bringing that up, if you've been following since last week, we did have that upper Bollinger move, which was basically the first one since last October, the end of last October. So we had the day one securing the level, day two giving us that higher high, which is fully expected, and then we usually see that downward consolidation into the 5-day moving average. Now, so far, we are seeing that, but we're also seeing some structure that can break us from that. So going down to the hourly time frame, and looking at some of our structure currently, we do have this very large potential of a cup and handle building, but we also have the potential of this inverse head and shoulders. So this is something we have to be quite concerned with, especially, moving into this week. And we also have this very large buying channel, which I'm going to pull up on the 4-hour time frame. And this buying channel has been holding very, very strong. We've been trading from the top of the channel to the bottom, to the top, to the bottom, to the top, to the bottom. Basically rinse, repeat, rinse, repeat. I know many might say that, oh, well, this isn't hit the bottom of the channel. It's very close. That's basically heading towards the bottom of that channel. So until this buying channel breaks, we have to be concerned about it, okay? Now, with that said, our 5-day moving average is basically going to be underneath this channel currently. Now, we can't see this channel expand outward. I've been talking about that for quite a while, but our 5-day moving average is still going to be currently underneath it. So we will be seeing a slight break in that channel. Even if we do extend the channel out, it will be breaking from that current trend. Okay, so that's something we do have to be a little concerned about. Now, with that said, with that inverse head and shoulders being there, potentially getting ready to form that cup and handle, if that occurs, that's going to pull us right back up into the upper Bollinger. Okay, so this would be upper Bollinger, almost testing that 5-day moving average, and then heading right back up to the upper Bollinger. Not something I usually see. That's very, very unexpected type price action. But I'm going to kind of explain why I think that might happen. And the main reason why is with the Fed CME. Okay. Based off of some of the data we got last week, some of the data we've seen the previous week, the odds of the rate hike went from that 68%, it was actually a little higher than that. Basically, we only had a 30% chance of seeing the rates being held / paused for September. Well, now that's kind of shifted, okay, and it hasn't shifted completely, but we're now kind of in the camp where we're seeing a lot more expectation for the rate pause compared to the rate hike. Now, the rate hike expectations are still very high, but this price action on the market overall is telling us that we are not expecting a rate hike. Okay. And this is the same type of price action we've seen over the previous year, where once we started heading down, we had those full-on expectations of cuts, 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 cuts. Even prior to that, plenty of cuts going on in there. And cuts bring a lot of bullish price action to the market. Okay. And the reason why they do is because it pulls the interest rates down. Okay, and that means that the banks are going to have to start pulling their rates down. Everything kind of trickles down through the system. So it is very important, even though it doesn't affect the market immediately, it doesn't affect the banking system immediately, it is very important. So if the narrative has been basically we're going to be hiking twice this year, and all the investors are starting to prepare for that, and all of a sudden now the Fed is and the bond market and the CME are basically saying, "Oh, just kidding, we're not going to hike at all." Um, that's going to shift everybody's expectations. Okay. And that's going to shift a lot of this selling we've been seeing. Okay. So it's hard to be bearish right now, even though, again, I am bearish over the next 3 months. That's just something I'm going to be, even if we continue rallying all the way up to 800. Um, I'm still going to be bearish over the market. Okay. There's still a lot of conditions that go on with the bond market during this time of year. We still have the Bank of Japan intervening and strengthening the yen, which they generally always start with the, with the treasury market, selling their own treasuries, selling US treasuries, trying to get as much money in their pockets as possible. After they kind of, extinguish those stockpiles and those securities, they run into the actual equities. So they start selling equities, they start selling crypto, all those type of things to get that additional cash in hand. Okay, we haven't seen that yet. Okay, we haven't seen that part at all. Actually, just going over the yen here, and again, you have to kind of look at this as an inverse. Okay, and what I mean by that is that the actual yen, if you were to compare the actual yen to this chart, this is the USD JPY pairing, so the US dollar to yen pairing. This chart would be, flipped. Um, so when this is low, that's a really good thing for the yen. That means the yen is strong. When it's really, really high, that's a bad thing for the yen. The yen is very weak at that time. So we did have this little bit of strengthening in here, but not even close. These were some of the prior, uh, strength or the yen interventions that happened. And we've seen it go from basically this 162, 160 range all the way to the very low 140s. We haven't even gotten close yet. Okay, and this again was one of the lowest times or one of the lowest rates we've seen the yen at. So they have a lot of work to do still, and I don't think they're finished with that. So that's something we have to definitely pay attention to. Now, moving into the beginning of this week, okay, we do have some key areas to start looking at. We have this 773.92. That's the resistance to the upside. It could break very quickly as basically the price did close right there. We have this 776.85, which that was the base, the all-time high. That creates another resistance to the upside. And we have some of these other ranges as well. So let's say going throughout this week, that would be Monday, Tuesday, Wednesday. Not that I'm expecting us to really push up to those ranges, but the top of this channel does act as a resistance range. So that's something you have to consider as we're pushing through this week. If we're seeing a lot of bullish price action, the top of this channel is usually when they start rejecting. Okay. If we break through this channel and we do start selling for some reason, perhaps if we start seeing the Bank of Japan selling equities, something like that, then we could start looking down at some of these supports, and there's plenty of them to go through. We have the 768.04, the 758.11, the 748.80, and we'll talk about that in the daily videos when we do the market recap and analysis. But my overall expectations for the week is that very likely we will be seeing the CPI and PPI coming in very cool, and that leads to bullish price action overall. Okay. I think potentially this week we could be seeing the 785, 790 range being pushed. If we have a really, really, really strong week, then we could see all the way up to the 800. I don't expect that, but that's kind of something we have to keep in our expectations regardless. I'm not really seeing a lot of the bearish price action, but we still have a lot of things to consider with the conflict in Iran. I haven't read the news today. In fact, I'll read that right now. Alright, so going over the news, essentially there's not much to talk about. There's been a couple reports stating that Trump is willing to completely ignore Iran's nuclear situation if they go ahead and open the Strait of Hormuz, which I'll personally say that's a terrible idea, and if he does that, that's not wise. But I don't have any control over anything, so what does my opinion matter, right? With that said, Iran and the USA still haven't gone any closer. Iran is still saying that, they're still having issues negotiating with Washington. And while we're sitting here saying that the deal is going great and everything else. So kind of the same as usual. The Iran conflict can absolutely spark back up, or we can see it get resolved, in a matter of days. So that's something we have to prepare for, right? If we see the Iran war pick back up, then it's very likely we will be seeing quite heavy selling into the overall market. If we see negotiations continuing to do well as our side says they are, then we should see continued buying. Because again, when we think about oil, oil created, very, very short-term inflation. And I know a lot of people were disagreeing with me on that at first, but what are we seeing? We're seeing the yields pulling down. We're seeing the odds of the rate hikes coming down. And this was talk that wasn't even reasonable a couple months ago, right? Um, Even though I've been saying it the whole time. So it is what it is. We'll see how that works out. Now, the last thing I do want to point out here before we go ahead and end this technical analysis video, and apologize for all the lines, we'll just hide those because that's not relevant right now, is we have been seeing the volume slowing down. Okay, we've been seeing the volume slowing down. We have been seeing the ADL, which is basically the money volume, slowly picking up, but it did have that pretty large rise in here, and then now it's kind of just gradual. Okay. This is not telling me that we're seeing massive, massive equity strength just yet, but we can't ignore it because basically it is pushing all-time highs. Okay. So throughout this week, we will be keeping a close eye on what's going on with the ADL. If we continue to see it pushing upward, then that's going to mean that the market is anticipating and, people are actively pouring more and more money into it. Okay, so that's always something that I tell people to pay attention to is the ADL. It's a very, very good indicator for the overall market, whether you're day trading or looking at the daily time frame. This is something to watch very closely. Anyway, with that said, everybody, I hope you have a great week. Thank you all for watching. As always, I appreciate each and every one of you, whether you're subscribed or not. Now, I would appreciate it if you could like the video. If you have any comments about anything, leave it in the chat. I'd be happy to discuss it with you. I have been having a little issues with the algorithm with my channel. And if there's anything you could do to help me with that, that'd be fantastic. But other than that, thank you all so much for watching, and I will talk to you in tomorrow's market analysis and recap. So have a great day. Take care, everybody.